shift focus to Cyient, and especially Cyient will be in focus given the fact that one of their arms, Cyient DLM, is all set to come out with this IPO, and we are joined by the chairman of the company with Mr. Krishna Bodanapu, who is joining us on the show. A very good afternoon to you, sir. Thank you so much for joining us on ET now. And let's talk about your IPO and the IPO size. It actually cut to 592 crore rupees from 740 crore rupee, and the pre-IPO placement is cut to about 108 crore rupees from 140 crore rupees. If you could tell us what is exactly the reason for this sort of a cut coming in your IPO size?
So when we looked at the capital requirements that we had in the business and a few other parameters, we decided to reduce the size of the IPO from 740 to actually 700. It's cut from 740 to 700. As a result, there are some regulations that SEBI has in terms of how pre-IPO works. So the pre-IPO was just purely a function of the fact that we cut from 740 to 700. And the idea behind that was we just looked at our capital requirements, and we want to be overtly aggressive in how much money we raise, because we also have a responsibility to then deploy that money effectively.
Also, sir, just want to understand the usage of the funds that are expected to be raised, and how has been the investor interest in your roadshow so far?
So the usage of the funds is for a few things. One is we see tremendous growth in this business going forward. There are a number of reasons, both macro, which includes the fact that India is becoming a very attractive manufacturing destination, which includes the fact that the consumption of electronics is going up dramatically, the fact that Cyient has design capabilities which are very, very unique, and then Cyient DLM has manufacturing capabilities, etc. So there are a number of factors from a macro perspective. And of course, from a micro perspective, the quality of clients that we have, the quality of work that we've done, the long-term nature of contracts, our backlog, etc., means that the growth potential has been tremendous. Therefore, we're looking at a couple of things. We're looking at funding the working capital. We have some debt, which we believe is better paid off right now because it gives us better capital structure and more efficient capital structure. And we've left a little bit of money aside for other corporate purposes, including a small acquisition potentially, just to enhance some of the capabilities that we have. So this is the use of funds. I'm very grateful to our investors and the potential investors that the interest has been really fabulous. We've had a number of conversations, and we're seeing the interest at a very, very high level, and we're very grateful for the confidence that they're showing in us.
Right. In your RHP, you have mentioned that Indian EMS industry is going to grow at about 32% CAGR. While last couple of years, if you have actually reported early teen growth at around 13 to 15%. So going ahead, are you going to be expecting an exponential growth in that particular domain, or do you see that it will remain at around 13 to 14%?
No, we do expect fairly significant acceleration in growth, and this is based on the order book that we have and the pipeline that we have. The last few years, there were some specific issues. We were also trying to make sure that the quality of business improves. So we have given up a significant amount of business because of the quality, be it the margins, the predictability, or even the kind of work that we were doing. So what we've tried to do over the last few years is make sure that the business is a solid, healthy business with a solid pipeline and good economics, and I think that's what we've achieved. So we will get to at least the average of the industry going forward, if not higher than that. So we're quite confident of that.
Also, sir, just in terms of your client metrics, when I'm going through that from FY22 to FY23, there has actually been a drop in terms of the number of clients from 50 to 37, and thereabouts. The new addition is also limited to just one. What could we get in terms of an understanding on this? What was the reason behind this decline, if you could just give us an understanding?
So some of the clients are really a point in time because of the cyclical nature of the business. But I'll say we're very, very confident in terms of the clients that we have towards. So again, I will come back to the point I made in terms of the quality of clients rather than quantity of clients. I think in this business, it's very important that we have the right quality of clients. So we've really focused on making sure that that quality of clients is there, because growth with those clients the next 5 years will be much easier, will be much more manageable, will have much better economics. So it's a very conscious decision that we're taking in terms of making sure that we have the right client base in terms of quality, not necessarily in terms of quantity.
Right. EMS is understandably a low margin business, but given your niche, is there any case that you can improve your EBITDA margins to at least double digits? And the reason why I'm asking this, sir, is the fact that your net level profit margins seem paltry at just 3 to 5%.
Our EBITDA margins will increase. They will be in the double-digit range. I think our aspiration is that EBIT also should be about 10%, which is as high as it will get in the EMS industry. So again, like I said, we've done a lot of work on the economics of the business and quality of clients, and that's actually playing out. I mean, we will see a continued improvement in margins. Foremost starting from the gross margin, which is already visible, but with growth, because we've also made a lot of investments in sales, in the leadership team, in systems and processes. So as growth comes, the absorption is going to kick in a fairly significant manner. So getting to 10% EBIT is in the roadmap, and we're quite confident that we will get there relatively soon. So that's as high as this business will get, and that's also a function of the fact that we're doing high quality work in some niche industries and not necessarily going after very scaled industries like, say, a consumer or a communications.
All right, so we'll leave it there. Thank you so much for joining us on the show, and all the best for your IPO. And that is the management of Cyient DLM. It was the chairman of Cyient DLM who spoke to us. And remember, the IPO price range is set at around 250 to 265 rupees per share.